Ladies and gentlemen, good morning. How's everyone doing today? How's everyone doing today? Kahawa, you haven't taken something? We're good? We start today off on a bit of a sad note in the sense that the technology sector has lost a very important member of the community. And just in a show of solidarity and also just commemorating and respect, I'd like us to be upstanding for a minute of silence, just to remember a good friend, colleague, Leon Kiptum. Thank you very much. We may have our seats. May his soul continue resting in peace. So welcome to day 2 of the inaugural Banking, Financial Services, and Insurance Week, where we explore innovation, inclusion, and the future of finance. A lot of great feedback from day 1. And one of the promises we made to each other, a smart contract of sorts, is that we shall keep challenging the notions that we've carried as a sector. We know that this is the convergence of three key events, all with the same commonalities and threads, and which is why we are here. And we said we must look at opportunities, both present and future, through a new lens. Ask the difficult questions. Yesterday, there were a lot of difficult questions. The why are we doing this? How can we look at this different? And also have the delicate conversations, whether we are connecting those on the commercial side or agreeing that this is more of a long-term view, that if we do this together, we then unlock future opportunities, and also agree how to build and create this value together. Earlier during breakfast, I was having a conversation with two gentlemen, and we said, can we just be honest about where do we compete and where do we collaborate? This is the line. We reduce all our costs, reduce total cost of ownership until here, and then we compete on product and customer service and things like that. So we do have one common plenary for the morning, which will be here. And then after lunch, we break out into, we go into breakout sessions. And these breakout sessions will be based on the different sectors. We have smart banking, we've got Tech, and InsurTech. And yesterday, we thought that after a heavy and intense day, the rooms will tape out pretty fast. But it was interesting that all the way till 5, the rooms were still pretty active. We had to move in and actively say, you know what, time's up. Let's wrap up. So lots of interesting conversations throughout yesterday. So we do have the trusty DX5 app. I don't know how many of you have downloaded it. If you haven't, go to your favorite application store, look for DX5. So that's DX number 5, and then VE events. And there you'll be able to find not only this event, but others within the DX5 ecosystem. And it's a great opportunity to be able to, one, connect with those who've registered for this event, whether they are present or not, and probably also book meetings and engage with them. Another point of note is the CIO 100 awards. The application 1 closes tomorrow. And the team is looking forward to receiving, I don't want to say African timing, I don't know if that's the most optimal word for it. But I know you guys have been working on amazing projects, and it's important that we surface those and celebrate those that are actually moving the needle or are pushing innovation on a different level. Of course, a big thank you to our sponsors, without whom this would not be possible. So do remember to make time to visit their booths. Lots of nice giveaways. Yesterday, I got a fantastic melamine mug. My son has already hijacked it from me. It's his new breakfast cup. I saw some stress balls somewhere. I mean, it can get a bit intense in offices. So just make sure, even if it's for the freebie, go engage and see what value you can extract from our sponsors. And today we build on yesterday's momentum. And our opening keynote today reminds us that financial inclusion is both a moral imperative and a market opportunity. And this keynote sets the tone for today, examining how the innovations that we discuss, how those are reshaping access to financial services, especially so for underprivileged or underserved communities. Speaking to us on the big opportunity with a keynote titled Innovation for Inclusion Across BFSI is a seasoned financial service executive with over 20 decades of experience across banking, audit, and risk management. Currently, he steers strategic growth and institutional transformation at one of Kenya's longest-standing financial institutions that probably only very few in this room probably even remember its beginnings. Ladies and gentlemen, help me welcome Managing Director, Postbank, Mr. Raphael Lekolo. Karibu.
Good morning. Morning, everyone. There was a cup of tea outside there which would have made you warm and lively. It looks like you guys skipped that, so I think I'll try and make up with a speech that is going to be a bit more livelier. Sawa. Yeah. Thanks a lot for that introduction. And for most of us, do you know when Postbank was formed? 1910. Yeah, 1910. We've been around. We've been around for some time. So what I'm going to talk about is how, from just a practical experience from Postbank, from 1910, you can imagine the technology that was there. It was like a small piggy bank. It was red. You, as the customer, you had one key. The manager had another key. So as you put coins inside, it could only be opened in the banking hall. So when you felt the box was full enough, you went there, you carried your key, and the manager would open, and then you count together. Then you give you a small note. This is how much you've put. Then you keep creating that ledger. How far have we come? How far have we come? At times when I tell that story, people, especially not my age, at least me, I experienced a bit of it. People my age will understand. But there's a generation which has just grown up on technology. They can't understand when you try to relate to them, that's what used to happen. So when you tell them about financial inclusion, they don't understand. How come you cannot bank this person? When you look at the numbers right now, in Kenya, I think 84% of Kenyans are banked. Yeah? 84%. When you look at the whole world, around 76%. So, would it have been possible with the technology that we had then? The passbooks? It would not have been possible. But a lot has happened, and a lot of developments have taken place such that now opening an account stops being a novelty. I remember there was a time banks in Kenya, especially the big corporate ones, actually said we are not going to have retail customers. Because what were they doing? Clogging their systems with numbers. And when I look back and I look at some of them have the highest number of accounts. Look at somebody like NCBA. Look at ABSA. These are guys who are talking millions and millions of customers. Are all those corporate customers? No. They've actually been able to rope in a new retail kind of customer and onboarded them and really transformed how banking is done. And that is what is called financial inclusion, having something for everyone out there. And I was reading about financial inclusion. I was looking at some of the statistics, and they said, out of this 76%, you have another number of guys, maybe 24%, who would wish to be banked. But actually, when they say they want to be banked, 2/3 of them say that they would need help. They would need help opening and using that account. So what happens now? There's this guy in the village, he needs help, and he can't come to a physical branch because you've really given him access to do the mobile phone. So that's where now AI technology comes in, chat boxes, systems that can talk to this customer, guide them through. You want to open an account? Siri, open for me an account. Easy, isn't it? Yeah? And that's how it is. Life has been made easy. Somebody can be talked through technology, how to operate that account. And when you look at all that, you say it is good. And it's best for the economy. Because at the end of it all, when those transactions happen, who keeps smiling at the end of all those transactions? It's the taxman. Yeah, so he's already also integrated these systems onto your platform so that any money that you collect or any transactions that happen, they are in the mix of it. So when you look at how innovation has helped in financial inclusion, it stops being something that we as bankers would used to do as CSR. In fact, up to today, if you want to open a branch or close a branch, a banking branch, and you're a regulated entity, you need permission from central bank. Why? Because you would have gone to an area, felt that you're not making enough, and then you come and tell them, I want to close this for other reasons. Right now, it doesn't matter because you have agency banking on the ground, you have mobile platforms which can run these accounts. And when you look at that now, that regulatory requirement, it was more to protect these clients or your customers who are out there in the field so that you don't leave them destitute, because long time you needed to go to a branch. Right now, you can access all those services on your mobile phones. So when you look at it, what are these key innovation drivers that have enabled financial inclusion? I think when I look back, there are a few things that have really happened. The technology has really changed. A phone, I remember 20, 30 years ago, a mobile phone in Kenya is the cost of a small car now. Imagine then, you'd have bought a new car, the same price with the phone. Right now, when I look back, this phone used to cost around 200,000-300,000. That's still the cost of a small car. So it was not something that was available to everyone out there. But today, just walk on the streets. You'll get a phone for 2,000, 3,000, yeah? And then there's also a technology and systems that have been put in place by these telecoms companies to enable you to even own that on a pay slowly basis. So where do they get information about Raphael, that Raphael will be able to actually pay back on this phone? Because when you connect to them, they're able to see and track your history and then give you a financial product, something that only banks used to give. So that's really also opened the landscape. The products we used to boast as bankers, as bankers are very conservative. We like ourselves, this is my customer. This customer is no longer a customer of the bank. He's a global citizen with a global perspective, with access to any platform across the world. So phones no longer now become a luxury, but more of a gateway to financial empowerment. So you can see from the pricing of these phones, you can easily reach a lot of customers and then just onboard them using the platform that is there. Out of this, these customers are actually now able to manage their accounts from wherever they are. And if I'm just to ask by a show of hands, when was the last time you visited a banking hall? Some don't even remember. Some even just open their accounts on the phone, never visit the banking hall. When was the last time you visited a banking hall? 2 months, 3 months, 6 months? Yeah? Can't even remember. And that's really a reflection of where we are in terms of the technology. So when I look at the access that we have with these banks, and I'm a victim, used to like signing those checks. Nowadays, I don't even sign a check. Yeah, I don't even sign a check. I remember my checkbooks. They'll be starting to become articles for a museum. Yeah? And when you come to Postbank, it'll be one of the articles that are going to be talked about in the future. This is how we used to transfer money. But because the technology has really enabled us to do a lot of things that we would not been able to do. When I look at Postbank's journey in terms of that transformation, where we are, and I look at some of the mobile apps and what it can do and the products that are there, just like, wow, okay, this is where the world has brought us. When you go now to open an account for a young person in the market, what do? Look for an ID, because you need to do KYC requirements. The regulator requires you to do that. But when you look at where the country is at now, the digital access to IDs and verification, the systems in government have enabled now banks to be able to verify. Yes, Raphael has this ID. Am I really dealing with Raphael? And behind that ID, there's a lot of information concerning who? Raphael. Where he was born, which town. So you can verify that with your birth certificate and everything. So there's a lot of information about Raphael, which will enable you to know who this customer is. And if anything happens, you're able to narrow down, because a lot of information is contained on those IDs, your fingerprints and everything. So know your customer requirements becomes very, very easy. You don't have to now sort of go yourself to the Bureau of that issues IDs. We have connectivity. As banks, we have that access, and you're able to verify online that this ID that Raphael has been verified, and it's a true copy of what we're supposed to be holding. So you can't have now fraudulent IDs. So when you look at that, banks have really leveraged on it, and telecoms have also leveraged on it, and it's easy now to onboard customers. So at times, even just opening the account, they ask you to take a picture and then send it over to the bank, and then the bank will do the rest. You'll find your account opened, and all the risk management processes have already taken place behind the scene. So you are not inconvenienced as a customer. So when you look at that aspect, which is quite critical as a regulator, the regulator now has had to say, okay, I'm giving this enabling environment for people to be able to operate. One of the other key drivers is just an enabling legislation, and also a regulator who has an open mind. A lot of the products that we see, half the time you've developed it, the regulator is seated there waiting to see what you've developed. By the time you're going to them, they have no legislation in place to guide how you're going to operate this new product. The good thing when you have a regulator who is open to ideas and who is open to ensuring that you're able to roll out very, very good products and at a faster rate, they listen, because it also stops them from really pushing banks to open branches and stuff like that, because they already know that we will build the legislation around it, and they know that what you're making is going to be for the good of the community and assist in financial inclusion. So that is a very good way that the government has really helped in terms of enabling the legislation around it. When you look at Kenya, the digital superhighway, a lot of the towns, they see fiber connectivity as far as towns in northern Kenya. So what this has done is to enable that interconnectivity between the banks and the customer, this ease of information transmission. So the enabling infrastructure, as much as it's the government driving it, it was really also opened up, because that connectivity enables information transfer, and that information transfer using mobile phones, you're able now to open those accounts in different parts of the country. And when you look at how it's been structured, and even when you look at how the government has structured it, is part of the fees that they collect, they go and set up even infrastructure in places where they know they are not going to make money, but they need that connectivity. So small towns in Kenya, you know, a town like North Horr, you know, you go there, you still have mobile connectivity, and you're able to transact from there. Embedded finance has really come into play. The integration of financial services into non-financial platforms, such as ride-hailing. And I was walking in, I saw Little Cab. And when you look at it, they've been able to roll out a lot of retail and other products that meet the people's needs, and also integrate it with your financial platforms. So suddenly, when you look at times I look at the M-Pesa app, when you look at what's available for you there, be it doctors, be it what, MTIBA, there's a lot of things that are there. Hustler Fund from the government. So there's a lot of host on that menu. This would not have been possible if it was more physical, but because of that digital platform and the embedded integration of everything together on like a mobile app or a mobile wallet, then you're able to do a lot of transactions. But behind all this, what's really running? There's some AI. Yes, Raphael is here. He wants money. Do you do the normal applications you used to do as bankers? No. Can remember, as a bank, the kind of paperwork you used to put on the table just to borrow 10,000 or 20,000. It was crazy. Right now, you even get a message telling you you qualify, isn't it? You qualify for this much. Because somebody has run your data and said, Raphael receives every month 10,000. He can qualify for 2, 3, 4 times this and is able to repay. So suddenly you find your bank telling you you qualify for 100,000. You don't even know what you wanted to do with it, but you qualify. So woe unto you if you see that and you take and you didn't have a plan for it. So there's a lot of financial literacy that needs to also take place. Yes, you're running these products. Yes, you're giving people access to all this. Yes, you're able to run AI tools and data mining and finding out who Raphael is, and then you offer him the product. You can imagine now somebody who is unbanked, he starts banking, and is not really being socialized and taken through a financial literacy training. Suddenly, after he banks, he finds he has access to 20,000. What happens? He starts misusing the money because he has not been socialized to being able to get money just like that. Because in the village, if I'm to get money, I would go maybe to John, give me 10,000, and then I know I'll have to repay him. Here it is, it's come on the phone. I can take it. Where will they get me? That's usually the thing. And when you look at Hustler Fund, that's one of the key things that they're really struggling with. Yes, I've taken the money. So where will you get me? It'll take you ages. But the thing is, they'll still eventually catch you if you continue transacting in any other platform, because all these systems are integrated. So it makes it easy for products like credit products to be rolled out. And when I'm talking about financial enabling legislation, you can see in Kenya now the digital lending regulations, they're already in place, and anyone doing digital lending needs to be registered. So you can see people already lending. The legislation came in, I think, a year or two ago. But how many lending platforms have been in Kenya? When you look at some of the numbers, the figures that are out there of how much people have borrowed, it's a lot. So the enabling legislation came later. So you can see government didn't really want to stop it, but they just want to pull all that into a regulatory frameworks. When you look at blockchain technology, which when you look at our IDs and I think even our land management systems, they're on that technology. Very secure, available, and it enables ease of doing business. Why? Because you have a secure environment where your data and everything sits. And out of that, you're enabling business people, everyone to continue working through this digital environment and being able to give services. I used to remember when I needed to make some payments abroad, I used to have a card. Yeah, Visa card, available everywhere. Right now, the card that we have is also digital. When you go to M-Pesa, I need to pay for something abroad, I'll just use the Visa card that's available, that is there on my M-Pesa. So it will deduct money from my account, and then the person on the other side, at the end of it, the e-commerce person will be able to access funds. That's made it very easy. So, and that's why I said, how many people have been to the bank? One of the key things used to go to the bank is to collect your ATM card and your Visa card. Right now, it is on your phone. The payments is also tap and go. You can still tap the same. So for a generation, they'll even not know what physical cards is. So we've removed checks, so cards are going to go very soon. One of the key things that's really happened in the banking industry and really transformed is agency banking. Yes, Postbank was the pioneer of agency banking in Kenya, and this enabled a lot of customers to have access to their funds wherever they are, because you didn't have now to put up very huge structures. All what you needed to do is to have an agent. So you can imagine when you have an agent outside there, like now the way M-Pesa is, every corner you see an M-Pesa, yeah? You're able to access your funds at any time, any place. So if you needed cash, then you're able to use those agency, I can call it the agency environment. And I remember some time back, we used to really restrict this agency. Right now, there is talk in the market and being driven by the regulator to have all those systems having interoperability, so that if I have an agency platform and I have agents out there, they can be used by any bank. Yeah? So what does that mean? I don't need to invest in an agency platform as a bank. So it makes it very easy, because there are all these agents who are there. And once you rope in the fintechs, the Safaricoms, of this world, then you can see that access to your funds, whether you have a bank account, access to your fintech account, you're able to access it very, very easily. So that environment has really, really changed. True inclusion requires more than just innovation. It demands a holistic thinking of the business models. As I said, as bankers of a few years ago, we were very, very tight. We were very conservative. Remember opening an account, you needed to have somebody with an account to refer you to open that account. That's really changed with technology. The product design, right now, if we want to roll out a product, it takes 2, 3, 4, 5 minutes. You can even roll out a product for just a small market, and within 10 minutes, you have it up and running. You don't have to really go through a lot of change in the systems or the back-end systems. You know, our legacy systems are the core banking systems. If you want to touch it, you touch one area, it affects the whole system, so you needed to have a very robust system for you to do any change. So product design, the products have really changed in terms of features, and they become very inclusive. So you can have a small product for people who are just joining. So it's eased a lot of financial inclusion capabilities. So it's very easy. The product is there, you can run with it. The distribution channels, as I've mentioned, it's available, and you can get access to your funds wherever and whenever, or you can do those transfers. I remember when I was in school, we used to wait for money orders to come. You remember the money orders and telegraphic money orders? We can have a side chat behind there. And then it used to be during parade. Raphael, then you see it used to be like a red envelope. Then you know money has checked in. Yeah, right now, we don't do that. But the distribution channel has really changed. The workforce culture also needs to really change. And I can see when you look at some of the big banks, I talked to some of them, we used to have a lot of operational people. Right now, you talk to the big banks, who have they employed? Young people who are in IT, you guys. That's where the business is, to enable these digital channels to operate. So the thinking and the workforce has really changed. And these are guys who don't even have to operate in an office. Because what have you given them? Some VPN connectivity. They can work even from home. And I'm sure when I see some laptops open here, I know guys are working. They have some deadlines to meet. And at the end of the day, you'll find the guy has done and delivered on a product. So just the work culture is really changed also. So out of all this, what happens now? You need to protect who? The consumer at the end of the day. This consumer needs to be protected. So a lot of legislations have come up, and you need to take note of those legislations. yes, you can have my data. What are you going to do with it? The government has put in an enabling environment for you to know what you can and what you cannot do. You cannot hold Raphael's data out there, outside the country. If you want to do that, then there's some legislation that will guide you on how to go about it. So they've set like a benchmark of what to do and what not to do, and especially just to protect the customers out there. When you look at some of the barriers, touched a bit on it, the digital literacy. The other day we used to pay what we call in Kenya, Inua Jamii, this is the social protection funds. Banks used to do it. Suddenly you find a 70, 80-year-old being asked to get access to those funds through M-Pesa. And you used to wonder, I'm like, this guy in the village, how will he get access to this? Of course, there's usually the initial teething problems. But that literacy, the digital literacy, you realize when it comes to money, people learn very, very quickly. Yeah? These 80, 70-year-old can take you through the process of accessing those funds until you're like, okay, yeah, I understand. And used to think, these guys will never catch up. But that's where they are now. The technology has forced them to learn new things. They're able to access their funds and do payments from wherever they are. Customer service, the only problem now is, yes, you have 6 million customers. You have an issue, you have to talk to 6 million customers who are calling your landlines or your telephone lines. So what do? Now you create automated voice. What are you looking for? Have you called M-Pesa? Press 1 for M-Pesa. Did your funds go through or not? Press another one. It takes you through a journey. And all that is just geared to answer some of the frequently asked questions. So half the time, you may not even have to talk to a person. You'll just be talking to a machine. Press 1, press 2, press 3, And that's what has happened. Yes, initially for us who are not in that space, we used to feel, why should I be talking to a machine? You want to walk into a banking hall to sort out your issues. When you look at it all in all, just as a conclusion, what are these barriers to financial inclusion? Digital literacy, I've talked about it. Affordability, you want to do 100 shillings transaction and you're being charged 20% of it as fees. Trust and security, that barrier has been broken. Financial health and inclusion, I think we are on a journey on that one. We still need a lot to do. And then I look at Kenya bankers who have customer protection charters where we need to do. The geographic and socioeconomic gaps, all those usually bring a lot of, I can say, barriers and hindrances to us not being able to really give bring about financial inclusion. So for me, it's not just a matter of social responsibility, it's a massive sustainable growth opportunity for our sector. Traditional models are insufficient, and innovation is key to unlocking this market. Technology will provide us with those tools. How we use it, it's up to us. But that success requires deep human-centric approach. Therefore, as leaders, we need to champion a culture of inclusive innovation, and innovators, please design solutions that are affordable, accessible, and that build trust among our community. So let's collaborate, let's build a financial system that empowers everyone, wherever they are. Thank you very much, and I'm seeing my time is up.
Asante sana.
I can see he's already standing. I didn't see him holding a nini. I'm sure that is the next step, but I'm done with my presentation, and thank you very much for listening to me, and enjoy the rest of the day. Thank you. Am I taking any questions?
Might we have any questions for Bwana Lekolo? It would have been great to see a picture of the passbook, and just to have to see how that transitions. Imagine, have you ever left some money in your pocket and then your trouser gets washed? Now I'm imagining that you have this passbook. You know, like the way now you used to do wallet check, phone check, right?
Yeah.
When you're leaving the house, is my wallet there? Is my phone there? Now we're at an age where we don't even do that because all our money is digital.
Yeah.
And I imagine now anytime you wanted to check your bank balance, this is like blockchain, guys. You know, only before the fancy terms, because it's distributed. Yeah? Like you have it in your pocket, always available, offline, no charges. So fantastic. Do you have any questions for Bwana Lekolo?
Yeah.
There's one question. Lady in red. Name, organization, kindly.
My question to you is, in this era of digitalization, and we've spoken a lot about innovation, in this area, in the areas that are not, the digital literacy is not up to standards, or rather, it has not yet gone through the machinery. Postbank being one of the main ones that go to the machinery people, and they also work for a microfinance that uses such. What are the banks and circles, the fintechs doing to ensure that literacy of digitization is passed to those people? Because you don't want to find your father has been washed all the money in their mobile phone. What are the banks and other circles and enterprises doing to ensure that the consumers are also protected?
Thank you. I think that's a very important and pertinent question, and it's something that we struggle even today, because yes, you've given people this technology, and it's money. I was reading the other day, there's this guy who passed on, people put in together a lot of funds. What happened to Ojwang's father? The money was washed.
Yeah.
So you need to be very careful. And I think it's more of continuous education. But the problem is these guys are always sophisticated. They're always 2-3 steps ahead of you. So as you finish with this and understanding what this problem is, another one has materialized. One of the key ones now we find is sharing of passwords. So we keep telling people, your password, your phone. Do not go clicking on links which you do not know. And that's what happens. People access you through maybe WhatsApp or something, but it's always a continuous education. Each time when you look at what Kenya bankers usually advise, do not share your passwords, you'll always find those irritating messages. Do not share your password with anyone. I can tell you, as much as it's irritating to you, it's helping somebody somewhere, because that's what usually happens. They've shared it without even knowing. Somebody calls you, your bank, I'm calling from KCB. Your account is blocked. How many have received those calls? Yeah, because the guys are working in courts with the guys who are in the bank, and all they need to know is your password. Press 1, 2, 3. Yeah, sasa weka ile password yako 1, 2, 3. Then when you look at the switch off the phone, when you switch it on, money is gone. But it's more of a continuous education. I think there's really nothing much you can do about that. As a bank, we are there and we try to help you. So if you find those initial transactions, risk management, because of AI, they'll say, Rafael never withdraws 50,000 twice. So on the third one, it'll block. So there are all those things that will happen in the background through AI and just risk management systems that will help you, but you can't really stop it unless people understand the value, what their password is. What's the value of your password? It's actually the amount of money you have in your bank, because it will get washed.
Thank you, Bwana Lekolol. Help me appreciate him one more time. His subject matter was on inclusivity. And again, I'd like to challenge us to go back to first principles thinking. We all want to say that the bank branch is dead because you're going digital. But because we are in cities and towns and urban areas where we are very busy, you may find that your relatives back home actually have more time on their hands, right? They woke up early, went to the farm, they're done. And visiting the bank branch actually served a different social purpose. So you're here trying to change this thing and moving people to a digital platform, yet they say, but when will I speak to Raphael? Yeah? The market days, going to the banks, all had a place in the social cultural context. And here we are, maybe in cities, trying to innovate so that you don't have to leave. But I want to leave. I want to go to the bank branch. I want to meet Raphael. I want to meet Harry. I want to meet Carol. How do I do that? So how do we bake in that social need in some of the new products that we're looking at? Like we said, banking is not where you go, it is what you do. How many of us have heard of Bangla Pesa? Heard of Bangla Pesa? How are we innovating for things like that or scenarios like that? Where we are saying, can we understand your community nuance and can we then drive solutions that deliver that value? Or we all know of table banking, right? And the unfortunate thing is that table banking is a rural women's thing. What if we looked at table banking with different eyes? And maybe one kolol is to say, can then Post Bank also be a Gen Z bank? Now, because you're rethinking these things. Yes, you have great pedigree. We all love all brands, whether it's retail. For Kenyans in the room, you remember Uchumi. If it came back to the market in a big way, you'd probably patronize them better. So same for Post Bank. Are we able to then see opportunities differently from a different lens? So again, let's think differently. Let's go back to first principles thinking. Now we're still in the banking realm, and we get to examine the conflicted CIO. Because the CIO faces a three-part challenge. You're told to modernize your legacy systems. You're told to drive innovation to keep tabs with your competition. And you're also told to satisfy boardroom requirements or demands for growth. Yet when you take the budget, you're told dotted line to the bottom line. Compliance, cost control, all these things. To help us unpack these pressures is a gentleman with over 15 years experience driving digital transformation across Africa, specifically working with strategic engagements with central banks, commercial banks, and financial institutions, helping them modernize core systems and launch digital-first experiences. He's passionate about growth and innovation and works closely with C-suite leaders to align technology with business outcomes. This is none other than Surav Gopal, VP Sales, Sub-Saharan Africa at Intellect Design Arena. Welcome.
Good morning, everyone.
Good morning.
Hope everyone has had coffee and is awake. Following Rafael is, based on my experience of around 1.5 decade, half of that in Kenya, more than half of that. I would say he's one of those MDs that is very in tune with technology, which is not. So he's very in tune with technology. That is not a normal thing to see nowadays. Anyway, the topic, like stated, is the CIO dilemma. Again, if you have ever been in a place wherein explaining to a board why upgrading a 20-year-old legacy system costs more than building a fintech from scratch, you're in the right thing. It's an honest, the CIO dilemma, it could have actually been said, the topic would be the CIO between the daily life of the CIO, between legacy system and a hard place. So, what am I talking over here? You're balancing three forces over here. Systems that are running on COBOL or another monolith, which are unwilling to talk to the outside world. And the outside world is look, you're not getting the camera angle correct, is it? So legacy systems that are unwilling to talk to the outside world while the outside world needs you to talk to them. Business who thinks the CIO is the next, maybe the CEO of, he's the CIO of Apple or Tesla. And the board that believes that yesteryear's hero, cloud is a passing fad, blockchain is a must-have or a good-to-have, and the AI is the next big thing. So you're caught in the middle here. Basically, not even caught, you're suspended in the middle over here. And legacy is behind you, digital dilemma, and let's not forget, the customer who wants a loan in 3 minutes, but your core banking would not update the balances in 5 hours. So in fact, a funny thing, one of the CIOs told me that their tech stack is API at the top layer, Excel sheets at the bottom, and the integration layer are emails. So that is what we are talking about over here. This slide, again, nothing new. The information on this slide, sorry, the clickers, okay. The information in this slide is nothing new. You already know all these things. I've just collated it into a single slide. Africa is moving fast. There's no two ways about it. This is the continent where Mama Boga's grandmother can receive money sitting 200 kilometers away in the time where a branch transaction in Nairobi bank is still logging in to the branch. Gen Z has no patience at all. The 19.7 is the median age in Africa. They do not have any patience at all. They are the Netflix and the TikTok era. Swipe everything and it should work. And they don't understand why a KYC process will take 2 visits to a branch, 4 KYC forms, and then still told, come back later next day. Africa, again, leads 70% of global mobile money by volume. However, banks are left behind, as highlighted by my previous speaker. So here's the irony. Many of you led the banking and the mobile revolution. Many of you in the room have actually led the banking and the mobile revolution. The numbers here don't lie. This is the kind of growth that Africa is seeing, but just in the mobile money space. The banking has transformed overall. But what's happened is the core of the business, the core banking has remained where it was still 20 years ago. That has not yet transformed. Innovation has happened around your core, but not in the core. So that is the next step, or the next step in the banking evolution that I see. Yeah, this is a very hard-burning slide for all the CIOs. This is what I call the technical debt. The legacy systems are like your old colleague, which has been in the bank for past 30 years, very knowledgeable, very trustworthy, very loyal, but has learned nothing new apart from Windows 95. They do their job, but they hold you back. In fact, a recent study of African banks, and this is not the entire Africa, this is just the sub-Sahara Africa that I'm talking about, 64% of the IT budgets, on an average, are being spent on just maintaining the legacy systems, which would imply that you are left with just 36% budget on innovation, to think something different, to think something new. $4 billion lost to cybercrime. And again, this was talked about in yesterday's last session as well, about FinSense was the company's name, I believe, the gentleman with the good long beard, that monoliths, they don't support APIs. And then you have the compliance struggle as well, with the regulators breathing down your neck. They don't support ISO 2022, neither do they support open banking. And the problem with legacy is, once your talent leaves, the tacit knowledge that he had also leaves with him. So that is the technical debt of a legacy system. Again, on this, legacy system is like a fine wine. It's aging, but nobody dares to open it. That is the core banking of today. So now, what am I talking about? What is exactly that the board wants? They want a customer growth and inclusion. They want operational efficiency. They want risk and compliance to be sorted. They want everything. However, they also want predictability. And the problem with innovation is that it is bound to be unpredictable. So the moment a board pushes you to be predictable, at that moment itself, you tend to not innovate. You don't think of anything new. You know, however, the solution to this, or how you would put forth your ideas is, uh, don't say that, I would want to include or innovate or move into the microservices or DevOps orchestration, but say, we'll cut the product launch time by 50%. The revenues will increase by 30%. This is the language that the board will understand and the budgets will get approved. Now, again, this is another slide I have collated together about the digital transformation that is happening in Africa. 76% of banks rank digital transformation as their top 3 agenda, and 36, one-third of them are considering this as the topmost priority, digital transformation. And what exactly, if you just dig deep, what does a digital transformation of a bank mean? It actually means 6 projects, 3 of them which never get off the shelf, 2 of them fail, and 1 somehow manages to be over budget. That is what digital transformation actually means in the real world scenario. Digitization progress, slightly less than half of the banks surveyed claim to have digitized 75% of the process. What exactly does this mean? That yes, whatever they were doing on paper has been exactly replicated in a digital form. The process remains same, the workflow remains same, no extra benefit of the digitization, just the papers have become scanned documents now. Primary digital investment area, 39%. In fact, if you look at this again, tells you another story. Why so much money or so much of the investment is happening in the retail sector? Because being not predictable or being innovative in the retail sector, if something fails, causes you less money, less of a loss, as compared to if something fails in the corporate sector. And therefore, if you see, you will be getting more budgets for your retail sector changes than your corporate sector changes. This actually ties into the fact that if you are hell-bent on being predictable, you will not be able to innovate. If you want a mobile app of your bank to be in a very certain way forever, ages and ages, you will never be able to change it to the better. Better or worse, but you will not be able to change it at all. Now, the key technologies that have been incorporated in 2024 is 25% are looking at cloud computing, and AI is a close second, with cybersecurity and resilience being the third. Now, AI again, there are multiple projects that are running at multiple banks just for digital agents per se, AI digital agents, but still none of them have reached the production stage or have not gone to the production. Perceived benefits, okay, this is a very different slide altogether, but you ask any CIO over here, the perceived benefit of partnering with a fintech, they'll say it's 100% benefit. Everybody, nobody will deny that if you are able to partner with a fintech, it's 100% benefit. What are you doing to partner with the fintech? No, nothing. There's no answer to that. Access to innovation and technology, everybody wants it. Is there any budgets allocated for that? No, it's not. Everybody wants to expand customer base. What are you doing with that? There's no answer to that as well. So now, what is the playbook? This is the CIO playbook that I have, based on the experience that I have had or over the years talking to different C-level people. What I have been able to, I would say, collate or comprise of in a very short single slide is innovation is about progressive modernization. A very interesting thing, I don't know how many people of you know about the strangler plant. It's a creeper. It grows around a tree, takes nutrition from that tree, and then eventually the tree is just a replica shell of that, and then nothing else remains. And the fig becomes the main tree. The tree in this entire example is your current core banking system. You progressively modernize around that, relieving it of its responsibility slowly, and then eventually the core banking just remains a shell, and then you remove it. Therefore, that is the way you should be progressively modernizing. Again, going to this agile microservices DevOps style, it's a mindset change, it's a culture change. The entire organization has to think in terms of small scale upgrades, changes, sprints. Nobody can expect the entire world to change in a day, but if you change a bit every day, you will be making a huge change. In fact, if just 1% interest every day will give you 36 times increase by the end of the year. I mean, you can do the math if you want to. Yeah, 1.01 to the power of 365 is actually 36. Then again, we have to have a collaborative ecosystem. The MD Rafael also talked about this, that when the fintechs had come in, they were treated as a pariah, that they will eat up the banking business. But that has not happened, and it is high time that the board and the CEOs and the CIOs and everyone together starts treating them as an ecosystem partner. If you don't integrate with, let's say, a little app or an Uber, somebody else will, and then you will be left struggling or being the second charge in that. And this fourth point will become very, very important when you actually start investing and using AI that make data your strategic core. The data will become the most, in fact, it is always called the data is the new oil, but with AI coming in, data will become even more important. And now, if CIO was Chief Information Officer and information is, data is information, so CIO should now be called Chief Impact Officer, I would say. Okay, now here's the good news. You don't need to transform everything as once. Progressive modernization works. One bank, actually in Tanzania, we started with just modernize their customer onboarding, just their small piece of customer onboarding. They went from 11 days to 15 minutes of customer onboarding. Now, when you do that and present this case to the CEO, the board, you will be able to get further budgets for this innovation. So if they see results, the problem that is happening is we are looking at a digital transformation as a 3-year project down, jumping down a cliff. It doesn't need to be that. You can take on small steps and show small results. Yes, you fail, you succeed. If you succeed in most, you will keep on getting those budgets, and then you, as a CIO, will turn into from a Chief Information Officer to a Chief Impact Officer. That is what wins trust. That is what will give you the budgets as well. Now, and why I'm saying this, that the CIOs in Africa have already done that. You've done incredible things. Africa has done banking on USSD, and they have been doing it for quite some time. The world, in fact, most of the world has moved away from USSD. Africa still supports USSD. M-Pesa still has USSD. You still use, in Africa, you still use USSD phones. You've served remote customers from across, using agency banking and all. You've used fraud detection. You've done fraud detection on 2G networks. So now it's time to apply the same ingenuity for inward to your own tech stack. Africa doesn't need to follow global models. You've done your own innovation. Just that somewhere in between, we just started focusing too much on the outside world rather than the internal tech stack. So you will be able to, and you should be able to build your own tech stack. Again, this is just a slide. I'll be sharing this. I will not want to talk through it because I just have 5 minutes remaining. I can see on the ticker. But let's simplify what innovation overall means. Faster onboarding, maybe smarter lending, real-time insights, lower operation cost. You just pick any of these topics, see how you can modernize your bank through it. So, and if you can deliver this without crashing anything critical, you are not just innovative. You will be called a magician. Trust me on this. Now, this brings me to my core slide or core thing. Anything else that you remember or not, at least keep this with you. Rafael actually talked about making the bank customer-centric. This is a platform or a model or a thought process or a first principle thinking where if you are able to think in this manner, you will be able to serve your customers better. Now, what exactly all these words mean? E stands for events. A bank, in their entire journey, would have certain events with the customer, with another bank, with a central bank, or let's say another third party, let's say a little cab or an Uber. These would be events. Now these events would be needing or can be encapsulated into microservices. A customer comes to open an account. Now the microservice that could be fetching the details from the core banking system, getting his details from, let's say, the registry, national registry, or getting his account balances. These things would be the event. Now these would be encapsulated in the microservices. To do this, you will have to use APIs which will be talking to each other. For talking to the microservices, would be talking to each other, to the external world, to the core banking, using these APIs. All of this would be hosted someplace, be it cloud, be it on-premise, it has to be hosted at some place. And because you've thought about all these things in such a manner, this will make your entire platform headless. Implies the front office will be decoupled from your back office, and not by emails. I mean, there would be a proper integration layer for that. And then you would have an embedded AI. What we've done, I mean, I represent a company called Intellect Design. What we've done is we have been able to segregate or pick out 650 such events that a bank can have in their entire journey. This is also, we are also learning, but for now, 650 events is what we have categorized the entire banking journey into. This can be bank to customer, bank to another bank, bank to central bank, bank to regulatory authorities. All of these events now are encapsulated into 386 microservices. And these 386 microservices talk to each other or the outside world or to the internal systems itself using 2015 APIs. This is how you will be able to show speed, cost reduction, and impact. And this is where, if you look at just the customer onboarding piece, if it was taking 11 days before, can take 15 minutes, that is the impact that you can show. So this is my last slide. The ticker has started blinking. So you no longer just keep the bank running. The CIOs, you don't just keep the bank running. You are shaping how the bank evolves, the entire banking sector, how it evolves. So you're not in the back office anymore. IT has been too long considered as a cost center. It is no more a cost center. It is where the strategy needs to be driven from. In fact, if a business person or a sales guy wants something to be done on let's say a marketing event, he will get the budgets approved instantly. And if the poor CIO just wants a penetration test done annually, even that will have multiple approvals to be taken care of. So to the CIOs, you are designing the future of African banking, and the future looks a lot more composable, intelligent, and inclusive because of you. Thank you. This is my last slide.
Thank you, Surav. Do you have any questions for him? There's a question right at the front.
Good morning. Thank you for the very insightful presentation. Mine is just a question.
Name, organization.
My name is John Kiptui from Postbank. Digital transformation is now a very key topic in any strategic workshop. Now, we've been told globally, transformation initiatives usually fail, and the failure rates are around 70-72% thereabout. Within the African context, and you've been in this area for a while, how is it performing? Thank you.
Okay, good. Like I said, again, if you look at a digital transformation as a 0 or a 1 story in binaries, either it fails or it succeeds, you will get those numbers of failures. However, like my pitch that I told you, if you're looking at small successes, let's say I was planning to do 45 things, I'm able to achieve, let's say I was planning to do 50 things, I was able to achieve 36, that itself is a 72% success. So if you think of digital transformation in those lines, let's say I will improve the journey of my customers let's say just the customer onboarding, or maybe the time it takes to make a payment, international payment happen, a cross-border fund transfer. If I'm able to improve it from a 2-day to, let's say, 30 seconds, if that is one of my measuring parameters, I will rate, and if I'm able to do that, I will state it as a success. So that is why, think of your digital transformation in the, I would say, in terms of multiple journeys that you would want to accomplish, multiple events that you would want to do. And in that, let's see how many are you able to succeed in. Let's not think it of as a 0 or a one-sum game.
Thank you. Any other takers, questions? We'll take one more from this side. Name and organization, kindly.
Hi, my name is Marcy. I'm from PwC. I had a question. You pointed out a very good statistic in terms of cybercrime. And with great innovation also comes great risk.
Yes.
So what have you found to work? Because I know a number of banks and a number of financial service providers are also wary of digital crimes. So what have you found to work in that space as they also innovate in the core?
Okay. Good question, and an important question over here. As far as cybercrime is concerned, I would divide it into 3 parts. One is, again, I'll take the name of Rafael, how he highlighted, that the user itself shares a password. That can be taken care of by educating the person. Second is where your systems are not robust enough. Somebody else can penetrate it easily. For that, we have very regular vulnerability assessment and penetration testings that we do on all our products, and would recommend the banks also to take it very seriously. Because, again, like I said, I have seen this in the past, that getting budgets approved for penetration, in fact, the projects that we've also done, many banks do not have a space for, okay, for example, they will have a huge timeline marked out for data migration. They will have a huge timeline marked out for user training. But hardly anyone has any time marked out for vulnerability assessment and penetration testing. This is one of the most important points. So yes, that should be also one of the key concerns that you should have.
Thank you very much. Help me appreciate, that will have to be the last one, cognizant of time. They do have a booth on outside, correct?
No, we don't have a booth.
You don't have a booth, but actually, great. If you haven't downloaded the app, do so now and book time with Surav and team to then unpack more of the great insights that we've seen. Do help me appreciate him one more time.
Thank you.
My key takeout was just one. You have to talk the language that the board understands. And you said if you're selling technology, you're always going to be in a constant battle. But if you sell the solutions and tell them I'm going to reduce this by X, or I'm going to increase this by Y, then we're taking a different angle on that conversation. I've had the honor of participating in the banking awards for the past few years, and it's great to see that there are more knowledge moments at board level around technology, right? Which means there's a lot less friction going forward. So if you just sidestep, do a quick change step, change the lingo, make them feel smarter. Unfortunately, when you come with all our tech lingo, if someone's not feeling that they're in a safe space at a mental level, absolute friction. You're not going to move anywhere. But if you educate them, as you're seeing a lot of these board knowledge moments happening, that will help us drive these conversations and budgets much, much faster. We're now looking at how we still reach the last mile and how this technology that we talk about, how those increase access. And in as much as technology is actually narrowing that divide, we still have lots of gaps. You may have seen some of those reports that say, yes, we do have connectivity, whether that's at a cellular level and now going into mobile data. But what about the places where that coverage is not there? You're building your solutions to say it should be digital in nature, but there's no connectivity for this nomad. Are we supposed to then say that they have no value? Yet if this fella just flipped a few heads of cattle from his head, probably has a bigger bank balance than yourself, right? Just that we're not paying too much attention to them. So conducting this panel is a lady who drives digital transformation across financial institutions in East Africa with over 2 decades experience in tech leadership, strategy, and innovation, strong foundation in strategic management and computer science, having delivered impact across banks, SACCOs, and MFIs, while earning recognition from organizations like CIO Africa, IFC Trailblazers, and the Women on Boards Network. This is none other than the CEO of Relational Affairs East Africa, Wambui Mbesa. Karibu. Welcome.
Am I on?
You're live.
All right. Good. Good morning, everybody. I'm so happy that I'm moderating this session. And I think I want to call up my panelists. Yes, please come on stage. One of them was a classmate to somebody I am married to. All right, Fidelis, you can come on stage. Fidelis is from the Kenya Bankers Association. Oh, there they are. Please come on stage. Harris, I've just met you today. Plaun. Please join me on stage, and I understand we will not have, who else is coming? It's just the three of us, yes. Thank you so much. I hope we just have 30 minutes to do this. I hope your mics are on.
Good. Confirmed.
And yes, so as you've heard, my name is Wambui Mbesa. I'm the CEO of Relational Financial Solutions Limited. And we did have a session yesterday, and I'm sure you've heard a lot about what we do. But today we're here to actually dive deep into this topic that is so important, reaching the last mile, and how technology expands access. And it's very interesting that in an era where we have mobile money, I mean, everywhere, we all know how it has transformed lives, we still have a section of our communities that are sort of left out. We still have gaps. We're talking about rural communities. We're talking about informal sectors, low-income earners. We still have gaps there. And so what we want to do today is to dive into the topic of how does technology, whether it's high-tech, low-tech, help us to bridge this gap. So I'm joined with a fantastic, exceptional panel of leaders. Right next to me is Harris Kamuri. Harris is Head of Business Services Solutions Engineering at KCB Bank Group. Then we have Fidelis Muya. He's not new to us. He's a Director of Technical Services at Kenya Bankers Association. And then Plaun Oyunge, who's the Chief Growth Officer at Pesalink. Karibuni sana. So let's dive in. Let me start with Harris next to me. Harris, the focus of where I want us to start on in scaling the financial inclusion while maintaining risk integrity. KCB has a vast footprint across Kenya. What tech investments have you had the most impact, in extending these financial services to underserved communities? What is KCB, especially rural areas, how is KCB doing that?
Thank you, and good morning, everybody. Yeah, my name is Harris. I lead the engineering teams in KCB. I'm the guy who builds all the solutions for the bank. Yeah. So the things that we as a bank are investing in, one is, and I think Lekolol kind of introduced it, is around agency banking. And the reason that we are very keen around agency banking, what we call KCB Mtaani, is that we want to take banking services to the far-flung areas. I don't know how many of you have heard a place called Takaba, for example, Hola. How do you serve those customers? The easiest thing you want to do is have a scalable and cheap to deploy, easy to deploy agency banking platform that then your customers can be able to access services where they are. You don't need to drive or travel 30 kilometers, 40 miles for you to go to a bank branch, but you can actually be able to be served within your community. So building a scalable agency banking, easy to use, and which is low cost, because also you don't want a very expensive to deploy across the markets. So that's a huge investment that we take in just to take services to the customers into the rural areas, informal sectors, and in every other corner. And the idea is continue expanding that agent network so that it kind of starts to cloud out our branch network, which is also pretty heavy. I think the other thing we've started to see is how do we also start to build platforms which are scalable, and as a bank, we can invest using our balance sheet, and we can be able to invest with what we have, but open it up to the fintech communities. And so we're in a process where we want to open it up so that if you are, and I'm happy to see SACCO guys here and such community-based organizations, where we can power your capabilities, and because fintechs can be able to go to the markets and understand a specific niche. I like when he was talking about Bangla Pesa. How do you get Bangla Pesa team to think around the products, but where you need to have the heavy lifting of the technology, then as a bank we can be able to drive that capability. So those are some of the things that we're really trying to bring to the fore so that we can be able to support, get into the rural areas. We understand we have to work together.
Okay, good point. Just on partnerships, so do you see fintechs as a threat or a catalyst in this, last mile discussion?
Call it competition.
Okay.
Competition means in some areas we'll compete. It doesn't mean that KCB will sit in the laurels and not try to do something.
Yeah.
But also we're opening ourselves up to fintechs, and we see a lot of collaborations with the fintechs. We've now opened up an open API capability over the internet so that fintechs can start playing around with what we have. And just come, we co-create together. It doesn't have to be you're always competing, because they are nimble, they are fast, they can be able to do things a bit quicker, and therefore we collaborate with them in that level.
Okay, I'm seeing a few smiles in the room, so that's good.
Yeah.
Pleun, PesaLink. Let's change the question a little bit. What does last mile mean in your context, and who is still being left out?
Thank you, and good morning, everybody. Right. So when you think about last mile, just the basic definition of it, it's the last leg in delivery of a service to the last person who actually needs that service. So when you think about PesaLink, in the context of digital payments, it's the individuals or the businesses, the merchants who actually require the money. So PesaLink is a B2B2C. That's the model that we operate. And our immediate partners are banks, fintechs, SACCOs, MFIs, and mobile money. But we really think about also the end customer, who's the C in the B2B2C. So, when you talk about last mile, is how does a PesaLink transaction actually get to the individual at the end of that value chain? Currently, we have over 70 participants in our network, and that includes, like I say, fintechs, banks, MFIs, we have mobile money, we have one mobile money, and of course, we're in discussions with the other two to come on board. So really, when we're talking about last mile, it's about access by the customers of our partners, of our immediate partners, who are the C in this value chain. And so it's accessibility, both physical and digital, but it's also how do they access this digital money, PesaLink transactions, right? So can they easily access, number one, and are they affording, are they able to do it in an affordable way? So if I can give an example, is if you send a PesaLink transaction to somebody in North Horr, like the example we were given before, then it doesn't make sense if that person cannot access that money. So that's the last mile that we're talking about, and we do enable a lot of our partners in that. Who's still being left behind? We've talked about the rural individuals, guys who still live who live in rural areas. Although we have come a long way as a country in terms of connectivity, it's still very low. And the places, there are pockets where connectivity is still a big issue, right? So those are people who are left behind. They're not there. Even smartphone access is high, but there's an issue around literacy. Yeah, are they able to do they really understand how to use the gadgets? Yeah, so there's a big question there. There is then we have we have specific marginalized group, for example, and I'll talk about women because that's a favorite subject of mine. And there's nuances around women, for example, that they cannot access digital payments because of technology, of cultural issues, literacy, things like those. And then we have other groups like micro merchants, and their business is majorly cash-based. So, when we talk about PesaLink and digital payments, those are guys who are completely left out of this space. Yeah.
Wow. All right. Thank you. Let's jump into a little bit of Fidelis industry-wide, regulations and standards, and the inclusion mandates. How to ensure that digital transformation doesn't, deepen exclusion? And maybe before you answer that, if you can just talk about, from a policy and industry perspective, are the current regulatory frameworks sufficient to promote actually the innovation while, protecting the vulnerable communities?
Thank you very much. The answer to the first section of your second question is yes. Let me put it in better English. The government, through several policy interventions, has actually put in financial inclusion. The problem is, if you look at it, is how we are going about it, and that is why everybody is talking about digital transformation. So, for example, the Constitution says financial services are a constitutional right. That's what the Constitution says. However, the government has not articulated to the person, especially the excluded, how they are to get that right realized. And that's where the challenge is in the market, because everybody is then left to interpret how they are going to do it. If we had a structured approach to, for example, in a national strategy of how we are going to achieve that, then people would start fitting themselves into the path to ensure this is where I play my part, or this is what I'm going to do to actualize that. So let's park that. The regulatory environment, I would say, is actually very conducive to financial inclusion, because the regulators are very open to innovation. That is how most of these innovations have been approved. We actually get delegations coming from all over the world, coming to ask us, how did the central bank approve M-Pesa? Because they cannot visualize how a regulator would allow you moving money from a telephone. They would not. But now that we've done it, they come to say, how do you do it? So we are actually one of the more forthright regulators in adopting innovation. The problem is the cultural issues about regulators is their knee-jerk reaction is to say no. So when you come up with an innovation, the regulator first says no, then convince me why I should say yes. So that's really where we need to start changing their mindset to say, yes, you have become thought leaders in terms of adopting innovation. You need to then culture yourself to be adoptive. And this is where we are trying to give them sweeteners by giving them regulatory sandboxes and those things, so that they interact with the technology to be able to understand how they can think in a technology vision. So having said that, yes, the issue about exclusion is about how we think applying the innovation to solve for the inclusion agenda. For example, if I'm going to develop a technology that is going to be digitally transformative, let me use his original thinking about digital transformation. Everybody is talking about digital transformation. It has a 75% failure rate. The reason is we are not putting the customer in the way of that digital transformation. So I'm actually trying to bring the customer to think about how I want them to interact with my digital transformation. I should be looking at, for example, the reason M-Pesa became very successful is it is a very simple use case, but I was solving for the customer's very, very simple problem. How do I, sitting in Nairobi, send money to my grandmother in 300 kilometers away in a way that she'll get it today, immediately available now? Now, if we approach all digital transformation in that way, then the success failures will be inverted. But right now, the exclusion is we are developing for the next greatest thing. So I want to put it for the iPhones, for the iPads and all that. But then again, who has access to that? So that is why we get the exclusion, because some of us sell it in a way, it's a fashion thing. So people say, it's like the way we used to have credit cards. I don't know whether you were there when credit cards were the in thing. I used to work for an organization that used to say, yes, I'm a bank, but a credit card is for the lady in leather, traveling, in the airport. So nobody who used to be a mama boga would be availed a credit card. Why? Because it was given to the exclusion. So that is how we need to change that. I hope I'm communicating.
Yes, you are. You are. Very interesting. And a few things. I don't know whether you noticed his answer. The Constitution says this, but you know the law to do this, does that sound like I be recalling your MP? The Constitution allows it, but somehow it's not. Yeah, but thank you so much. Those were interesting insights, Muya. So let me come back to Harris. Harris, what is that one innovation you've seen that has had a surpassing impact on inclusion at KCB?
Thank you. So I'll look at it in two ways. Number one is, you see, if you're working from a financial organization, unfortunately, you guys are profit-driven, right? Now, when you try to do a lot of these low-cost, low-tech technologies, you'll find a lot of those customers when you start, they might not be profitable, right? And so one of the things we've started to see is how do we start working with partners, partners who can work together, build a product, until this customer is able to migrate to a level they become profitable. To the bank. And you'll see what we're trying to do with KCB Foundation, whether it is Mifugo Nimali. We're trying to help farmers who ordinarily would not be profitable to an organization in terms of financials. But you start from there, then you grow them. And that then now helps you to start moving them into inclusion. And that starts to teach you, and you start to learn how do you actually target these customers. So a lot of it is, especially for financial inclusion, it's not, as Muya said, it's not the complicated iOS, Android stuff. It's very low-tech capabilities. But then also what we're starting to see, having opened up our platforms, is what we're seeing with very interesting fintech starting to come in, with very good ideas, where then we support them from the back, but then they're able to go out there to the market. So for me, building that capability in the platform level, which is an open API, open ecosystem, is starting to really bring niche markets and niche fintechs who are then bridging in the gaps of those unreached markets.
Yeah. I actually love what you do at KCB Foundation. I was once a guest speaker when there was a session educating the SMEs and so on and so forth, and it's really great stuff. So yeah, Playo, I'm back to you.
Right.
Okay, so you're in real-time payments. That's the ecosystem, yeah.
Yes.
That you're in. Huh? What innovations are you exploring? And I don't know whether you've thought about it in this way, to make digital payments more accessible to the unbanked and the underserved. Do you have that angle? I know you're a,
Yes.
intermediary, so to speak.
So let me preface that discussion first by, I'm sure maybe there's one person in the room who's never heard of Pesalink.
Okay.
There's only one.
Go
I'm sure
ahead.
there's only one person. One. Yeah. So if you've never heard of Pesalink, so we are we're an instant, open, and interoperable payment network, and we facilitate real-time payments from one account to another account. And this account is not just bank account, but also wallet, like I said before. So that's the preference. So we have a lot of partners that we work with. And from an innovation point of view, in fact, we are really keen to open up the ecosystem. Like I said, because we are open and interoperable, we are open to everybody in the ecosystem who can facilitate, who wants to play in that in that space. So that's one. And the type of innovations that we are exploring. One, currently we are known for for P2P. What people say is P2P, payment transfers. But really, when we dig down into the type of transactions that we do, actually most of them are business payments. So we do maybe over 50% of our payments are business payments.
Okay.
And so we are in that space of facilitating payments and making innovation work for businesses. One area that we are really keen to explore is matcha payments, and those are everyday payments because, again, the other thing that people think is PesaLink is only for large payments, but it's not. In fact, we also facilitate payments up to even 1,000 shillings, and there's a bracket that is even free. So how do we make it possible for people to make everyday payments? That's your mama mboga payment. Any payment of low value. How do we facilitate or enable our customers or your customers to make such payments? We already are in discussions with our partners, and KCB is a big partner of us, and I can see a number of our other partners in the room just to open up that ecosystem. The other area, and just beyond...
Are you in discussion with SACCOs as well?
Yes, definitely.
Okay.
So we do have 6 of the biggest SACCOs already connected in our ecosystem, some directly and others indirectly. And of course, we understand the capacity challenges for most of our SACCOs. There's one individual I worked with a long time ago when I was in banking, who I've seen in the room, and we're going to have a longer or lengthier discussion because it's still in SACCO banking space. So even just enabling payments in the SACCO space is a big deal for us, and especially if you're talking about last mile, because that's where our real customers are, and of course in the fintech space. And just also another innovation that we're exploring, and this is something we've talked about before, is beyond making payments in Kenya. How do we support or facilitate last mile for remittances? So there is one collaboration that is already ongoing, and that is PAPS. If you've heard of the Pan-African Settlement System, we're already in discussions with them, and we'll be running. We're in the process of. We are almost going live with them. That means if there are countries that are connected to PAPS already, they'd be able to send transactions through us. And many others. And of course, I like also the discussion around agent banking, because as I was talking earlier about access, it's not just digital access, but it's also physical access. So how do we enable, and we're very keen, and of course having those discussions with our partners, around how do we open up the agent banking, agent ecosystem through PesaLink. Right? So that through PesaLink, you can go to any agent across the ecosystem and still be able to transact. Right? Yeah.
All right, thank you. We are down to the last few minutes. Fidelis, so there's the, trust is a very important thing in this industry. And then we have emerging technologies like generative AI or predictive algorithms and so on. And I'm wondering from a regulator, point of view or through your lenses, how is KBA fostering trust across the sector when it comes to deploying these emerging technologies, especially generative AI right now? It's a hot topic.
Yes, it is a hot topic, and everybody is asking, what do banks deploy AI for? Right now, everybody, if I step out there, they'll have a question or two about it. The way we do it is looking at how do we adopt AI for the customer's needs, and then how do we protect the customer's interest as we do that. So you'll probably think about predictive engines where we credit score. The considerations there as we look at the industry in terms of people trusting is being open about how do we actually use the data, where do we get the data we use to do the engine? Is it fair? Because a lot of people think it is a yes or no answer. And they look at me and they say, you last bought a suit 3 weeks ago, therefore you qualify for this. We need to be open to the consumers to tell them this is how we calculate, so that they have confidence that you are not biasing them against or for, depending on which side of the coin they fall. And then we have to be careful that we communicate to them how the system is then applied to ensure that they enjoy the service, so that it is in their interest, not necessarily in the bank's interest. So as KBA, what we try to do is develop thought leadership and explain to the consuming market how these technologies impact on their services and how they are then able to interact with them to their benefit, and what to look out for in the event that they feel they are not being served as expected. Yep.
Interesting answer. Thank you very much. So I want to ask a question that I want us to all answer. So we'll start with Playun and then we'll come this way. And Playun, if we were to measure success, not by downloads or transactions, but by lasting financial empowerment, what is that one metric that you would propose?
Yeah, well, that's an interesting question, especially for me who's chasing transactions. But when I was looking at the last data, I think it was the FinAccess 2024, it shows that as a country, financial inclusion is upwards of 80%. But financial health is still, is it less than 20%? And I can't quite remember the number, but it's maybe 20, 30%.
Okay.
Actually, no, maybe around 18, 20%. But what is financial health, really? Beyond looking at financial inclusion, there's the inclusive finance, right? So you're looking at things around resilience of individuals and of households and of these payments that we're making. So inclusive finance covers things to do with everyday payments. Are individuals able to make everyday payments with these payments that we're facilitating? Are they able to save? Are they able to invest? Things like insurance, where does that come in? So for me, if I was to, and I have many, but I would look at resilience.
Okay.
Yes.
Yeah, I mean, just following on that, it's very interesting. Not so long ago, we had people even running away from their homes, especially in the rural areas, because yes, they've gotten access, but they're being hounded. You must pay, you must sell your chicken. There's a lot of chaos around this. We keep saying there's financial access, and Kenya is doing very well, but that lasting financial empowerment is not. We're still not seeing it.
Yes.
So, Muya, what is your take on this?
Yes, I think the issue of financial access is not a problem for us. It is, what are we doing with that financial access to change the lives of the people? So, for example, if you went to your village, he mentioned of a village 300 kilometers away, how is financial access enabling that person enjoy a quality of life that makes an impact in their life? And that is what we should really measure ourselves to. If you look back at the constitutional requirement of a right to my financial access. So really, it's not about I can get it. It is what can it do for me to enable me have a better life. And that, I think, is what we should start translating our measurements on.
Absolutely. Absolutely agreed. Your take?
Yeah, I think they've said it all. We've got to move away from just giving access to actually having meaningful impact in people's lives, because that's why they will care to have it. Otherwise, if you're just going to give me access and it has no meaning in my life, then it's going to be difficult for them. So for me, it's measuring how they are progressing in their lives. Are we able to create models? And this is where AI comes in, where we can be able to measure what is the impact we're having on a person's life. And it's holistic.
Yeah.
Are we seeing them now taking their children to school? Is their business expanding? Are they now saving? Are they getting better money habits? And for me, then that really is the impact we'll have in financial inclusion.
Absolutely. Thank you very much. Ladies and gentlemen, that was a fantastic, let's give them a hand of applause. And basically, just to summarize, it's not just about access and the last mile and so on. If we want to really empower the underserved, the communities in the rural areas and so on, it's about the impact that, this whole thing is having in their own lives. So let's go out there and do the right thing with technology. Thank you very much.
Thank you.
Thank you.
Asante. A quick photo op for the panelists. Just eyes straight to the cameraman. You know, that last question reminds me of a hawker in Nairobi or Lagos in January. What do hawkers sell? They'll sell you sweets, they'll sell you handkerchiefs, and the guy is sweating profusely. And he has handkerchiefs, but he can't use them. So remember, we're talking about the fact that access is not utility. So yes, the technologies are accessible, but are they usable? Let's not just provide technology for technology's sake. And you say, my cousin 450 kilometers from Nairobi has a smart enough phone, but does he have the data? Yeah, so he effectively has a dumb pipe. And it's not only about, inclusion, we tend to think it's only about rural folk. But you could have $1 million bob in your account, and for whatever reason you have a kabambe, and because you do not have a shilling to access your bank's USSD code, you are the ultimate pauper. How many have experienced that? You're like, okay, let me pay you, and then you're dialing and you're told you cannot access this service. And you're like, but I have $1 million bob in my account. What do you mean I cannot access this service? And you're there trying to explain, probably to a kiosk guy who's rolling their eyes and saying, yeah, the suit, the watch, it's a bunch of bananas. So how do we think differently about inclusivity? Let's for a moment not think it's about the other person. In Swahili we say, leo ni mimi, kesho ni wewe. And we all know that there's something, at least in Kenya, called the Universal Service Fund. At last check, I think they had 12 billion in the coffers that they're still trying to figure out how we're going to put this to good use. And earlier this year, they launched shall I call it a manifesto or a plan, a framework, 40 billion shillings to try drive access, maybe to put out 25,000 public Wi-Fi hotspots that could be free, maybe ad-supported. That model don't know what is quite there, but you can bring some of this value back home very quickly, where they say, dear banks, just make all your USSD codes free and we will support it. Because unless maybe you're just checking balance. Maybe you should just be allowed to check your balance once. I don't think we are those guys who, I check my balance now, and then an hour later, I just want to see how much money I still have. We don't do it that way. We know we expect the salary is coming by the 25th. So has it come in? Yes. If it has, can I utilize it? So even for our regulator, because we're talking about regulators, we've got a pot of cash that in as much as we are thinking of all these amazing things, laying more fiber, can you just make it possible for whether you're urban or rural to just access your money easier by maybe saying zero rate all fees on USSD codes? Because USSD codes for me is like the SI unit. Anyone, dumb phone, smart enough phone, iPhone, something, all of them can utilize this platform. So let's think differently. And on PesaLink, where are the banks that are thinking differently? Where are the banks that are willing to anchor these new use cases so that not every organization, not every SACCO wants to have a direct pipe in there? Who's willing to do that? Yesterday, at the smart banking track, we're talking about all these banks that say they have sandboxes, but it's less sandbox, more quicksand. Because you come in and you're stuck. 4 years later, they sold you this big promise, but you can do absolutely nothing. Right? So let's think a bit more differently about the opportunities that lie ahead. We now go into a case study, and we shine a light on open finance. We've talked about open APIs, open banking. Open finance goes wider. And this next presentation explores how open finance can drive innovation, competition, and inclusion, especially for SMEs and in sectors like agriculture. We'll be drawing lessons from markets like the UK and Brazil, where open finance has been instrumental in bridging the gap between finance and the real economy, where stuff actually happens, in these centers, whether they're urban or rural. And our speaker today is a technology policy lawyer who's shaping the future of data governance in East Africa, strong legal background, and a passion for innovation, where she ensures that companies stay compliant in an increasingly regulated digital ecosystem. Currently serving as head of data protection at KCB, where she leads their compliance strategy, safeguarding customer trust and institutional integrity. Today, she comes to us in her capacity as board member, Association of FinTech in Kenya. Help me welcome Rosemary Kimwatu. Karibu.
Thanks, Mbugwa. Good morning. Yeah, I think it's indeed a pleasure to be here today. So, a story started about 2.5 years ago when some partners got together and asked ourselves, what can we do to rejig? We've moved so far in terms of payments. I think we're the cradle of mobile money as it is used all over the world. But there was a feeling that among stakeholders, what can we do if we come together and take a deep dive into open finance? There are many markets that have done this across Europe, Brazil, as has been mentioned, and they've had traction. So these three partners, Association of FinTechs, where I'm a board member and a volunteer, the Kenya Bankers Association, I saw Fidelis here earlier, and FSD, our strategic partner, we came together and decided, why don't we put our minds together? Why don't we invite the industry to share their ideas in terms of what they think about open finance? What is our baseline? What does it look like? And what is our future? And glad that Fidelis has walked in. In case it's a correction, I'll put my hand up, but thanks, Fidelis. So anyway, we had a study that was undertaken, and below we're just presenting to you the findings. Because what does it mean? All these things that we've talked about, open APIs, data sharing, people usually look at data protection practitioners as just wanting to protect data and silo it. But there's a larger conversation. Once you've handled your data in a particular way, what is the larger opportunity that's available? So the roadmap was, of course, figuring out the context and where we are. The other question was questions in terms of data quality. The other in terms of how then do you implement open finance. And of course, next steps. So guys, this is a snapshot in terms of where are we if we were to have open finance to expand quickly. First and foremost, the baseline, digital accounts, all of us in one way or another, whether it's a SACCO, an insurance, so on and so forth. The other part is fast digital payments. How then do we make sure that whichever access you have, how then are you able to engage? The other, of course, is diversity of providers. And finally, that forms a framework for open finance at the larger area. But of course, where are we as a country? We have data protection regulations and for open finance. And then, of course, on the other end, we have the National Payment Systems Act. We have the Banking Act, digital credit providers. We have a number of segmented regulations that all guide the various siloed industries. But how then do we form a framework that helps everyone integrate? Yeah, we have registrations. The framework, we have mobile money players, digital credit providers. And of course, we have payment systems. But what is the key thing? Interoperability. Yeah, and how then are we thinking through this? And then, of course, enablers that we have. And 82% of Kenyan adults use mobile money, 53% use it daily. But the question is, how integrated are we? I think at any one point, we're all coming to ask, how then can we do more with what we have as resources? So when we asked the industry, this is the feedback that they gave. We asked them, what would you benefit if you had open finance in Kenya? One, all of us sell products, one or the other. And they said that product innovation would be the biggest win. The other would be increased competition and choice. Of course, the other one was greater consumer control and banking and fintech interoperability. Yeah? And of course, reduced costs. But the biggest thing that players had was, how then do we give better products? From a regulatory perspective, this is how the regulator thinks. They think in terms of, how do you improve competition? How do you encourage innovation? How do you foster digital financial inclusion? And how do you enhance customer protection? So what you see here is at play between what the players think of and what a regulator thinks of. But at the end of the day, we realize that we spoke to various players and they all want exactly the same thing. We all want access. We all want to give better products. Yeah? So And when we asked them, what do you think that open finance can deliver for product innovation? The first thing was better identity. I think we live in a continent where there's not enough data about the initiatives that people do. We've had conversations about Mama Mboga. We've had conversations about the Boda Boda guys. We've had conversations about people all over the country and the various things that they do. Open finance, we believe, can open for them various services once we can confirm the identity and actually just size them properly. If you look at somebody's transaction, you just think they're just passing money. But if you're able to use open finance initiatives, you're able then to properly judge them. Of course, financial management, these same people are utilizing information, they're utilizing data, they're passing money from one way or another. How then do we help them have financial management tools? How do we provide? And through open finance, we can do this. We're an agricultural-based economy. It was discovered in our study that agricultural financing through a huge data stack can actually be improved if we utilize data finance well. Of course, then digital loans, making that lower cost, and then of course, seamless integration of financial services into the various things that we do, including gig work. So this is a snapshot of where we're at as a nation. But the key takeaways from industry, what did they think? The industry told us that one, our industry as it sits, it's already supportive. The only thing we need is a regulatory nudge to make people actually push themselves more into this. So of course, we believe that there'll be a great impact. So we are basically supportive as a nation. Among the key concerns, of course, was data protection and data security. That was the main concern by players. And they asked them, and they kept asking, if we move to open finance today, what then do we do to protect the data of the players within the ecosystem and even of the customers? The other one was in terms of data sharing agreements. And the question was, I'm an entity, I have worked so hard to build the data that I have. I've worked so hard to build my customer database. Does open finance mean that I just open up my business to somebody else? So those are some of the questions. But right now, where do we sit? In terms of open finance, it was noted that we actually have a bilateral sort of play right now. If you look at, for example, CRBs and maybe banks, and of course, the biggest thing that we need to do then is to have better templates, standardization, and then of course, what the industry felt was that a partially mandated approach is greatly favored as opposed to maybe a voluntary approach. And a voluntary is what we have right now, where we have various APIs and people plug in. So fragmentation has been a big thing in this market. And what was felt is that there's a need for a robust accreditation and vetting process. How do you bring players in? Are we just going to allow anybody to come into the open finance framework? There'd be need for a proper accreditation. Then, of course, standardized rules. How then do you play in an open finance play if you don't have rules? How do you, as a business, come in? So those are feeling that among the key pillars will be having proper rules. Then, of course, compliance processes. Compliance does not come to stop you. They say that when you drive a Ferrari, what is the most important tool that you need? Brakes. Yeah? So if we're moving into an open finance framework, then we just need to make sure that how then are we cascading compliance across? And then, of course, standard connectivity requirements would be needed to require clarity, reduce redundancies, and address competition concerns. And finally, what are the data types? And of course, there's this thing that, data is just everything right now. What data sources would be most beneficial? And this is what the respondents said. They want to know about mobile money and account data. They want to have information about ID and demographic data, deposit account data, credit data, investment data, and location data. These, they felt, are the most important things that should be shared. And then in terms of the most desired in open finance, payments and mobile money accounts, identity and KYC, deposit accounts, and credit data. So the players in the market said, if we were to do anything, these are the key elements that we be interested in. So how then do we address access, costs, and utility of financial services? So the key thing over here was increased access, reduced cost, and improved functions. Those are the key main things that they felt that is necessary. And of course, if you have various platforms, how interoperable are they? How are you serving? And how do you have reduced charges, lower cost payments, and then of course, having more access even for the users in terms of what they know about themselves. And then of course, the challenges and risks. The biggest risks that were found was lack of benefits to industry and consumer. That was at a very low level. The other one was cost complexity. People are very worried about how much it would cost. And then the other issue was lack of participation by industry and data security. Data security still keeps being a huge thing that comes up. So we'll need to have a trust conversation as players. We'll all need to come back and sit at the corner and ask, what does industry trust look like for us if we're to share data in an open finance framework? And then, of course, in terms of industry participation, right now there's a feeling that there's high market concentration and that open finance would only favor the larger players. So how then do we flip the trust conversation? And then, of course, looking at how that would be impacted. So in terms of what frameworks do we look like? One, fully voluntary. I think that's where we are right now. The second one is voluntary with mandatory standards, where you can all play, but there's a particular type of regulation in terms of how do you come in and plug in. Then the other one was mandatory for part of some sectors. And of course, finally, mandatory for all sectors. The mandatory model for portions of regulated financial services sectors, there was a preference, at least, for that, because it gives consumers rights over the data, standardization, of course, and then, of course, market coverage and speed of implementation. So these are some of the ways in which it could be implemented, and there are jurisdictions that have already started doing this. I think if you look at Nigeria, they set up open finance regulations, and they're going live in August. And the question we asked ourselves as Kenya, where are we? How quickly can we get there? So this study was to try create a baseline of how then can we be part of the larger conversation. Then, of course, it has then been recommended that a phased but mandatory participation process with sponsorship models may be suitable. Yeah, so not to create shock therapy in the industry, but how do you have a phased approach? Yeah, so in some instances, people will say, one, let's not have third parties. In another instances, you'll say, let's have third parties for outsourcing, but not connected to the data exchange. Then the other one was sponsorship models, where we allow third parties to perform other functions. So the sectors to be included in phase one maybe would be banking, mobile money, non-bank, insurance, MFI, securities, and SACCOs. Basically, the whole spectrum that is represented in this service today. Yeah, and asking ourselves, is there a likely role for an aggregation and intermediaries? How then do we all get to engage together? Yeah, so there are several governance models. One, a government-led model. Another, a special purpose entity, an entity that is created specifically to push for open finance. And then the other one, of course, is non-profit or self-regulatory. And finally, a decentralized set of standards. So these are the basic frameworks that we're thinking. In terms of, as a country, which bucket would you fall in? And then, of course, the governance views, they prefer a mixed governance approach. The industry has responded and said, can we have both government, industry, and civil society working together? And that authorities then take oversight roles, and then increasing technical supervisory capabilities to ensure. Then, of course, pricing and monetization, that's the biggest question. Will I share my data for free? Or how do I get paid for the investments that I've done? So that's going to be a huge, huge conversation. Of course, the answers are not yet there. And the question is, we may need to review local evidence, global experience, and set the rules in terms of costings. As we said, whenever there's a cost, there's one person who will have an added advantage over the other. And finally, what are the key questions? Let's think of policy, data standardization, consumer protection, financial inclusion, and collaboration and capacity building. This gets to the nitty-gritties of what is needed. We can have very fun conversations about integration, about working together, but basically what I've presented are the hard conversations that will need to be had between the various players in order for us to get somewhere. Looking forward to a future when we can all just integrate, work together to see the next best version of financial services inclusion through open finance, and actually creating the reality that is in our minds that we could actually do better, and hopefully live to the dream of the three partners who then wish that we can rejig the market. Thank you very much. That's it. Asante.
I'm sure we do have a question or two from that insightful presentation. For me, that thing about mandatory standards was key. Because, in Kenya and probably many other African markets, even when something is signed, people still don't honor it. So, what's the challenge, or how do we ensure that compliance is there? And, it brought in a memory from banking years past when we tried to democratize access to, call it open ATMs, if you may. And we had banking, we had independent parties setting up, third-party ATM networks, and some of the big players, frankly, just refused to plug in. So how do we drive that and ensure that we are all of the same mind in terms of driving this access that we seek? Any questions for Rosemary on that report? Do help me appreciate her then. Thank you so much.
Asante sana.
And for the work that you continue to do with the board, just driving this. You remember she said it's a volunteer position. Sometimes, I don't know how to say it in English, it sounds weird. You send yourself.
Kujituma.
Kujituma. So
Bogwa,
sometimes you...
If no questions, then the day that partners come in for open finance conversation, you only have one option. And the answer is what? Yes. Right? Thank you very much.
Asante sana. And it's great to see people actually contributing of their time and expertise to actually drive a conversation for something that is much bigger than self, and also much bigger than any individual organization that you could be working for. So we now break for tea, and I implore you, ladies and gentlemen, sip. I know the tea is hot, coffee is hot. Sip quickly. When you see me coming around with the bell, or any of the ushers coming through with the bell, let's get back in here. We have a lot to get through before lunch and even after lunch. I'd love for us to be able to catch up on time. So do enjoy the hospitality of our sponsors, and we'll see you back here in another 20 or so minutes. Karibuni.
Even with the growing threat of cyber attacks, many organizations still downplay the consequences associated with an attack: financial losses, damage to reputation, legal liability. The impact of a cyber attack can threaten business continuity and even potentially put an organization out of business. Appropriate protective measures like monitoring and managing access to critical resources, securing distributed endpoints, rapidly responding to threats, preventing network intrusions, and protecting data are imperative. And organizations today need to be well prepared for what the future holds for them. Learn more about ManageEngine's proactive cybersecurity solutions and how to mitigate the risks of cyber attacks.
SolarWinds Observability SaaS unifies network, infrastructure, application, database, and user experience into a single integrated full-stack platform. This holistic approach helps you deliver insights, analytics, operational intelligence, and automation at a business service level. Collecting the necessary data is fast and intuitive. Observe everything from databases, hosts, and services to websites, network devices, and cloud infrastructure, all from the same dashboard. Each entity has a health score, which is calculated by combining the status of key metrics and anomalies. Our SaaS observability option makes it easy to group multiple entities together. This lets you track the overall health of your critical business services and all the entities associated with them. It provides multiple business-level and technical health views through lists, dashboards, and dependency maps, so you can drill down into the granular details of each entity and pinpoint the root cause of performance issues. Topology maps are generated automatically and show the relationships and dependencies between entities. Get detailed analysis of logs, metrics, database queries, and distributed transaction traces, and leverage them to troubleshoot and resolve application, database, and infrastructure issues. SolarWinds Observability is designed to grow and scale to accommodate any type of environment you manage. It supports both open source frameworks, optimize performance, time.
Innovative Connected Africa Summit soundtrack. I got you, baby.